like shaking my head. I got a lot of hair. Look at all this hair. You gotta shake your head if you got all this hair. Now I can't get it out of my face. What's up YouTube and welcome back. If you're new here, my name is Greg and I post videos every single day about the stock market, options trading, and wealth management. And if you're green this week, or you're red, or you're blue, whatever you are, make sure to hit the like button, subscribe, and hit the bell so you're notified every single time that I post a video. In today's video, I'm going to be showing you the different types of watch lists that you should have and how to create them. Long-term trading, swing trading, and day trading are all completely different. And accordingly, you should have different stocks on these different watch lists depending on what your goals are. So let's start with the long term because this is typically the safest investment that you can make. In general, large market cap stocks from companies that are worth more than $10 billion are a great place to start when you're long-term investing. But don't let their market cap be the sole indicator on why you see value in that company. Just because a company is worth over $10 billion doesn't mean that they are smart with their money. Take Ford as an example. Take a look at their long-term chart and leave a comment below if you see value in their company. In the year 2000, they are worth $31.42 per share. Currently, they're trading around $5. Something else to take into consideration is how new or how trendy a company is. Generally, for your long-term portfolio, you want companies that are going to be around for a long period of time. If your future grandchildren can't be investing in this company, then you probably shouldn't for your long-term portfolio. Take a company such as Coca Cola for an example. Their market cap is well above $10 billion, currently above $200 billion. And you can bet your bottom dollar that your grandkids will probably be around to see Coca Cola. They have seen continuous growth in the stock market, even though they did some pretty shady business back in the 1930s. So they're likely to be around for a very long time. On the other hand, take a company like Zoom, who has completely disrupted the communication industry and has doubled their market cap from $20 billion to $40 billion in a matter of 2 months. Their surge was likely based on the pandemic that we're currently experiencing, and maintaining this market cap is likely unsustainable for this company. So make sure whenever you're investing into your long-term portfolio, make sure you're not investing in companies that have risen just because of one instance, but rather have seen consistent growth over the past decade. If you're completely unsure of where to start, generally the stocks within the S&P 500 are good companies to invest in, but only if they've seen growth over the past 10 years or more. There's companies like General Electric that are still in the S&P 500, but they've lost 90% of their value in the last 20 years. For swing trading, your criteria are going to be a little bit different because you won't be holding these companies for years and years to come. For swing trading, you generally want to predict where the specific stock is going to be in 2 to 5 days. This is where you can start looking into some trending companies because the news can either really help them or really hurt them. Companies Gilead and Abbott are really being hyped up right now. Abbott has created testing and Gilead has produced a treatment for COVID-19. So these companies might be good swing trades, but they may not necessarily be good long-term trades. When picking out stocks for your swing trading, take a look at the market sentiment for that sector, as well as using technical analysis and the 6-month, 1-month, and 2-week charts. Ultimately, this will give you more data because you're looking at more charts and you're looking at more time as well. A company being hyped up and trending can also come back and bite you in the butt. If they don't live up to the hype and they don't produce the product that is expected from them, it will fall faster than they rose. So be extra careful when you're picking stocks for swing trading because you won't have the benefit of time for correction in the stock. And the final thing that I want to talk about is picking stocks for day trading. Typically, the best day trades come from the stocks that have seen the most loss or the most gain in the last day. So usually, and this isn't always the case, if a stock has risen for the past 2 or 3 days, it's likely that on the 4th day, it'll need a correction and come right back down. And it's the same thing with the opposite scenario. If a stock has been falling for the last 2 or 3 days, it'll likely come up before it starts trending back down. Basically what I'm saying is the market needs to correct itself from time to time, and this is how you can capitalize on day trading. Whenever you're day trading, you also need to keep in mind market sentiment as well as trading psychology. As a stock gains more and more value, more eyes will be on that stock as the day goes on, and more people will be buying into it more, pushing the stock up even further. Everybody is going to be chasing into the highs, and at some point it'll be sold off. So given this, it is important not to let fear of missing out get the best of you whenever you're day trading. And instead, focus on the fundamentals and technical analysis. Ask yourself, is this stock under or overvalued? Will it continue to trend up or down? And at what point will the EMA, SMA, MACD, and RSI all line up to the point to where I should buy into this stock? I want to show you 2 screening tools that you can use whenever you're trying to put stocks into your different watch lists. One of them will be on TD Ameritrade and another website called finviz.com, whose link I'll be leaving in the description below. So with all that said, guys, I guess I'm not really going to be trading. So let's get into the watch list. Right now I'm on Thinkorswim, and if you want to scan for stocks to add to your watch list, a good way you can do this is by going here, going to scan, set a market cap for over $10,000 million, which is $10 billion. This will give you all the companies that are worth over $10 billion. And as I said earlier, these aren't necessarily the best stocks to invest in just because the market cap is high. Doesn't mean that it's a valuable stock for your long-term portfolio. So what you can do is you can hit scan, look through all the stocks, and typically find the ones that you've actually heard of. So, for an example, Apple is a company that everybody has heard of. So let's go back to the charts and look at Apple. So this is Apple's chart. Let's look at the 20-year chart, because this will give us more data than if we look at the 2-day, 5-minute chart. This started off way down here around 90 cents in year 2000. Okay, and then we saw a little bit of increment. We saw a little bit. It dropped off a little bit. Started to grow exponentially, fell off, grew exponentially again, fell off, grew exponentially, fell off. Now it's growing again. And this will continue to trend up. We've seen this for 2 decades. So what's to say that this company will not continue to grow over the next 10 or 20 years? So this is why I see value in Apple. And you can also look in the S&P 500 in order to find this on this watch list here. You can go to public R through W and then scroll down, and right here is the S&P 500. So we can link this to red. This is linked to red. So every time I press down, you will go to the next stock. So obviously there's no value in KIM. We had this giant high here at 53.60. Now it's currently trading at 8.92. So of course that is a huge loss for Kimco. MKC is McCormick. So this is definitely a growth company that started out around 13.81 and currently they're trading for 156.89. So this is why I see value in MKC. So this is just for your long-term portfolio. So if you don't know where to start, look at the S&P 500. Scroll through the different stocks. See which ones are trending up, see which ones are trending down, see which ones are just trending sideways, like Enlock, for an example. They've been trending pretty much horizontally since late 2004. So that is for long term. Now, if you want to create your own personal watch list on Thinkorswim, all you have to do is click here, go to create a watch list, and then name the watch list whatever you want. So I'll say long-term portfolio. And then you can add whatever stock you want. So I saw value in Apple. I saw value in MKC. So these are just examples. These aren't financial advice. Keep that in mind. I am not a personal financial advisor. But these are 2 companies that I personally see value in. And you should do your own value analysis before you buy into a stock for your long-term portfolio. And the great thing about Thinkorswim is you can have multiple watch lists. So I can create another watch list, and I can call this just simply swing trades. In order to find stocks for your swing trades, typically I like to follow the news because news gives a lot of hype, especially today with all the stuff that's going on in the market. And a good place that you can get good news from is marketwatch.com. Marketwatch.com has all the news you need to know pertaining to business. So see what's good, see what's bad, see what's trending, and from here you can add to your watch list. And then once a stock is no longer relevant, you can simply just take it off your watch list. And the final thing that I wanted to show you is FinViz. With FinViz, this is financial visualizations, and they have a screener app that you can use, and you can set this to anything you want. So you can have descriptive, you can look at fundamentals, you can look at technical. So say that you want to find something for your swing trades. So you might want to look into the 20-day simple moving average line. They have all of this information. If I want to look something that's trending above the 20-day simple moving average line, we can just say price above SMA 20. And these are all the different stocks that are trending above the 20-day simple moving average line. And if you want to check out the charts, you can simply just hover over it. You can see that Agilent Technologies is definitely trending up. We saw a high around $85. It dropped down during this market crash, and now it's at $79.95. And now if you want to find something that has made a significant change over the last day to add to your daily watch list, go to Today Up, and you can sort by change. So this is the least amount of change, so click this again. Now you can see the most amount of change. And Servco Corporation has gone up 87.56%, which is a gigantic amount of change for the last day. They are only worth $11.39 million. So these are going to be more volatile stocks given that they don't have a large market cap. There's not a lot of people buying them, and there's just not a lot of volume to base your technical analysis on. You can also sort by market cap. Microsoft is worth $13.61 billion, so definitely a good company. So all of these different stocks, these are actually the top 5 stocks in the S&P 500. And this is exactly why, because they have a large market cap. They've gained a lot of value over the past decades. So that is how to create your watch list, guys. Thanks for tuning in. I'll catch you in the next one. Remember to stay positive, stay green. Bye, guys.